This is Brad Matheny, and I just wanted to follow up with a little advice. I've been getting some messages lately from people privately indicating they're struggling with their trading. And I want you to understand that the general rules for trading are far different than, that of a gambler. And I really classify people into two separate modes. Either you're trying to trade for profits, and you understand that trading is a slow game of trying to gain wealth over time with the best opportunities setting up in front of you, or you are addicted to just trading and gambling anything. It's going to go up, it's going to go down, whatever. And there's a big difference. So, hypothetically, you come in here and you look at a 5 minute chart and you look at this and you think, well, it's going to go up, it's going to go down. Yeah, but you're in a fairly tight range, 562 to 564 and a half, almost 565. It's a 3 point range. If you're going to be trading options, 0 day options, you're going to pay a premium to try to get a strike price, even like right now. Your best strike price you're going to be able to get is 565 right here. And you're going to pay a premium for that. So, there's your strike price. Next one is going to be 566. Next one is going to be 567. Next one is going to be 568. Great. Okay. You might be able to trade that 568 for, maybe $100 a contract right now, maybe 140 a contract. But the long and short of it is you're going to have to see a big gain in order for that to be able to come up here and hit this strike price and be able to actually do something, especially on a day where my research suggests that we're looking at a potential topping pattern into a flat down pattern, and we're seeing very solid lack of momentum. So you've got to really understand that, 20, 30, 20%, 30%, 40%. If you get anywhere in that range on a trade, take it. That's a good trade. You do 3 or 4 of those a day and you can quit, okay? And then go back and try to do it the next day. But you got to remember that, negative 20%, negative 30%, and or negative 40%. These are areas that you want to now protect yourself against risk. You get into negative 30%, you're probably better off just closing the trade and being done with it and try to look for a better opportunity. Now, I have tools on my website that can help people. I have tools for traders. I'm trying to give you guidance. I'm trying to assist you in learning what you can and cannot do. One thing I wanted to point out on my website, which is very important, forget about much of this, but this is really what a trader is, okay? And let me see if I can find something else here. So the reality is this is all about my paper trade challenge, my $1,000 challenge account, trying to show people how to do this slow and steady. I'm not trying to be crazy. I'm just trying to shoot for this 40% a month. I'm now, 60 days plus into it, and I'm at 4,200. I just completed the 80 days, and we're sitting right at the right target, looking pretty good. So at this point, we should be looking at around 3,800, moving up that range fairly quickly, trying to get up into this area, turn $1,000 into $155,000 by the end of a year, roughly. But the point I was trying to make, and not sure I have it here. That's not it. Let me see if I can find it. There it is. Let me load this up. So this is the paper trading plan, right? Paper trading start with 1,000, break that capital into 1/3 daily limits, meaning I can only trade 1/3 of my daily capital at a time. I never want to get to the point where I risk more than, 40, 50% of the daily limit. Trade no more than 2 to 4 times a day, which sometimes I break, sometimes I don't. Like, for example, haven't traded today, didn't expect much of a move. Try to target 1 to 2 short-term trades and 1 to 2 intermediate trades. Right now, I've got a couple of intermediate-term trades that are actively running, gold and silver, and 1 long trade in the SSO that's doing pretty well. Attempt to keep my losses limited depending on market volatility. And if I lose more than 1/3 of my account, I will stop trading and reevaluate what I'm doing right and wrong. Meaning that, if I lose more than $300, or essentially 1/3 of my total account balance, mark this here as 1/3, I want you to realize that you need to stop. Let me make this in capital letters. Stop and reevaluate what you're doing. The daily goal is averaging 15 to 35% over a 30-day period of time. I'll try to execute trades in the morning, use with bent.com members, blah, blah, blah. I will attempt to pull short-term trades off as early as possible, trying to lock in gains. I will attempt to let intermediate trades run for a bit longer, and I will not attempt to chase the market unless I see a very clear ABC type of price pattern. So again, this is a long-term plan. This is not gambling. The point I'm trying to make here, as we go back over here and over here and over here, is this is not gambling. I do not advise gambling. If you're gambling and you're having trouble and you're risking your full account, which I know some people do, you're in a different boat. You might as well go to Vegas and bet red or black, and put all your money on red or black and see what happens. I guarantee you do that enough, you're going to go broke at some point, and then you're going to go broke again, and then you're going to go broke again. Because as soon as you start betting all your money on one outcome, you're either right or wrong. And when you're wrong, you go home broke. The way I trade is I trade in a much smaller, manageable mode, where I can only risk 1/3 of my position at any given day, meaning 1/3 of my total account. This is on the small paper trader account. And the idea is to be aggressive. I don't have to trade every day. I can trade once or twice or 3 times a week and still do well, because I'm waiting for the bigger moves. I'm waiting for the consolidated moves to happen. One thing that I've shown people is this is my crash index chart. I love this little crash index chart. I've got the dollar in here, I've got the SPY, and I've got gold. I need to update it, so let's go back over here to 5 minutes. And I want you to pay attention here that what we're looking for, like for example, today, here's the beginning of the day. And this works particularly well for the SPY and the QQQ and indexes or ETFs associated with the SPY. So here we have the beginning of the day. Remember, I had predicted this morning that we were going to be looking for a topping pattern. You remember that I come back over here and get rid of these so you can see. I'll go back to these later. But I want you to see here on an hourly chart that we were looking at an upward trend. You follow my video, I suggested that we were going to try to move up into this area. Okay, this 570, 575 area. Looking for the markets to try to run up here over the next couple of days, find resistance, and roll back downward. Okay, that's been my recommendation all the way up. And, we had that pullback day yesterday, which I recommended would be a deeper pullback and a rotation. It did set up, no big upward rotation. We're getting it today. We're getting the upward trending today, moving into that topping pattern. So today, ideally, guys, you should be looking for some sort of a topping pattern, kind of like that. So what we're going to look for is we're going to look for that topping pattern, and we're going to try to be reasonable about our trades. We come back down here to 5 minutes. And let's take a look. Here we are. We're moving through our cycles. Remember, 20, 30, 40% really is our numbers. That's where you want to target, getting the most you can out of this. And like I said, we're just above 565 now. You can buy the 565 puts or calls to go ahead and get into this mode. We are technically moving higher. Your next level is going to be 566 on the SPY, and then 567 up here. And every time you move out with call options to these further out numbers, they're gonna cost a little less. But remember, you're gonna end up having to move further to see a greater gain. Okay, potentially to see it hit your strike price. So on a 0-day option, if you were to buy at this level up here, you might see a little gain this morning. But if it never gets up to this level, it's gonna end up worthless. So, on a 0 DTE option, it's good for morning trading. So let me try to give you guys a little hint. 0 DTE options, great for morning trades. You do not want to hold 0 DTE options into the afternoon unless you are already in the profits and you have some really great moves, or late afternoon if you can buy something close to a strike price and get a good move in the last hour or two of trading, then yes, I think that's a decent type of a trade. You're risking, but you're risking a smaller amount than buying them in the morning. 1 to 2 day or 3-day DTE options are better for moderate swing trading. Reason being is if you're wrong, you are a little bit slower in the time decay, and you have a little bit more time for the markets to try to move into a profitable trade. Yeah, you're going to pay a little bit more for them, but they're going to move a little slower. They're going to give you that chance for 20, 30, 40% profit as long as you catch the right trades. Now look at how beautiful this move upward is. Just absolutely ticking right on up. Perfect. And then, like I said, for swing trades, when I'm coming over here and I'm showing you these upward moves, and you can catch these lower types of modes like we had yesterday, you can go out with, a 7 to 15 plus day DTE options are great for swing trading. And when I say swing trading, I'm talking about, 5, 6, 7, 8, 9, 10 days or longer. And that's what I did a lot of times with my gold. Like, for example, I ended up buying a bunch of gold options. Let's go over here to daily. I ended up buying a bunch of gold options back over here. I think if I remember right, it was early February. So pretty much right in this area probably. And yeah, I had to weather this storm. Okay, but I had strike prices up in this area. Cost me a pretty penny. I was spending $200-300 per option, but I had a almost 60-day expiration. And so, now my gold options are doing great. They really are. They're doing fantastic. They're up. Gold is up 30, 40. Everything is up. I'm all above the strike price in my options. Nice clear swing trades. Beautiful. Could almost close them out and reinitiate some new ones if I wanted to. But the whole idea here is I didn't have to trade every day for this. I just had to, manage my risk, know what was going on in the market, which is what I try to tell you every morning, and then let you set up your own swing trades. I bought some options that were, 60, 65 days out. Okay. I figured that I would be able to see metals move up sufficiently to be able to turn into some profits. And now I'm close to, 140 to 200% profit in some of these gold trades. And I'm loving it. I'm loving it. This is a nice move. But again, I'm not having to chase and I'm not gambling. I did not risk my entire position on this trade. So now we come back here. You can see we've rallied up. We're now about 566. This would, on a 2 or 3 day option right here, this would be a 30 or a 40% profit right now. From basically right down in this area to up in this area, you'd be at a 30 or 40% profit. What you want to do right now, guys, if you were in this scenario, is you want to book some of those profits right now. Okay? I mean, literally, go away. Come on, Kurt, give me back my screen. Book profits and potentially reattack. We're getting a nice clear breakaway. I teach this to you with Fibonacci price theory and the idea that we are moving through an excess phase peak pattern. You can see it here, rallying on up. That's a good bullish signal, meaning that we're moving higher. There's an excess phase peak on a 5-minute chart showing you that we should be moving higher. Great. How can you determine how much higher we should go? I showed you that earlier. You can take a look for the most recent standout low up to this peak here, duplicate it, and come to this low. This means we have a chance here of getting up into the 568, 569, maybe 570 level. And look at this start to accelerate. But at the same point in time, look at this move here, 5 minutes on the crash index, getting very solid trending in the SPY. And again, here's the crash index symbol. So pay attention, crash index symbol. For all of you guys who don't know it and want to use it, that's it. That's the crash index. It's basically the financials, the XLF, the transports, gold, and oil. Added together, divide by 4. And what you'll find is that if you look at this, and you'll see that in a downtrend, let me move this out of the way, and a downtrend on the SPY, when you get into this breakdown, you're going to start to see the crash index rolls downward generally into this mode. This was yesterday. In a rally mode, you're going to find that you catch a rally and it starts to take off up in a rally mode. So here's a moderate rally right at the open, beginning of the day on March 17th. Nice solid rally phase right here. Nice solid rally to the upside, stalls out a bit and begins to move higher. So again, back over here. Nice solid rally phase, gap up at the beginning of the day. Little cautious, you can be off of a gap, but we get a nice solid rally phase on the crash index. Everything moves higher throughout the day. Yeah, it flattens out. So does the market. It flattens out right here. This is a move here where we rally up and we start to flatten out. We eventually get above this high right here and drift a little higher. We move into a bit more of an expansion trend right here. But again, here's the move, breaking down, and as soon as we hit this low, you can see that pretty much that low was our low. A little bit of a breakdown right here, but that was our low. Now we pulled a little higher, and you can see we start to move higher on the crash index. So it's not 100% perfect, but in consideration, when you look at what's going on with the dollar and with gold, you can kind of pay attention. So gold had a big move up here. This was actually a rolling of the contracts from, the March contract probably to the May contract. And now we're looking at a bit of a roll down in gold, moving a little bit higher, not much right now. I think it's going to move higher. But SPY is moving higher, dollars moving higher, and of course we come down here and grab our little crash index, and our crash index is moving higher. Rolled over now just recently. We'll take a look at this. Rolled over right here. So we'll see how this plays out. There it is. So again, what I was trying to talk to you guys about was this idea of gambling. Okay, and again, come back over here and remember, if you trade like this, whatever your account total is, if you risk no more than 1/3 of it per day, and you stop if you take more than, call it 30, 40% of your account drawdown, then you will essentially protect capital no matter what. You will move away from that gambling mode. Okay. It takes practice because it's hard. Everybody wants to get out here and everybody wants to have those big winter days and be able to say, hey, I made a ton of money in the market. Yeah, but you know what you're not talking about are those days where you just don't make money. And it happens probably more often than not that you don't make money and you don't know what to do. And then you catch a little winner. Maybe it's a big winner. Maybe it's 3 grand. Maybe it's 30 grand. Who knows? But then you go back to losing, 5, 10, 15 grand a day for 5 days. And then you catch a big winner. Before you know it, man, you're broke. Okay. And that's the way it works. If you are not prepared to slow growth your way into trades, getting in, one or two contracts at a shot. Oops, there's my old server. One or two contracts at a shot and trade, not being, a superhuman trying to trade like a madman, then you can do well. In fact, I used to teach people, and I'm going to tell you this right now. Long ago, when I was doing my lecturing circuit back in the day with Futures Magazine, and I did an international technology conference years ago in the mid 90s down in Southeast Asia, I would tell people break your trading or your account, your total account, into an 80%, 20% allocation, where 80% is for investing and 20% is for trading. Now, break your trading account into 10 individual slots. Instead of breaking it into 3, break it into 10. That means if you had 20 grand in your trading account after breaking it 80-20, that would equal 10 slots at 2 grand each. Now, if you trade those once per day, giving you essentially, you'll roll through them every month 3 times. 10 trading days the first 2 weeks, 10 trading days the second 2 weeks, and then basically a little over. So you move into the next month on the next 10. This is a way for you to limit your trading without going broke. Now, if you break a 10% or $2,000 loss, if you reach a 2,000 to say $4,000 loss at any time, stop. What are you doing? If you've hit a loss of that amount, which is essentially 20% of your account, and you don't know what you're doing or you don't realize what you're doing, stop. Rethink what you're doing. Rethink how you're trading. Rethink your emotions. Rethink your actions. It's critically important that you understand that trading is not gambling. And when you get into, I'm going to state that, when you get into a gambling mode, you'll make stupid decisions and you'll blow up your account 9 times out of 10. I mean, do you realize that 90% of most traders who open a new account blow up their account within the first 60 to 90 days? And they get hooked on this idea of, I'm going to gamble. And that's what happens. You go home broke and then you save up some more money and you try again. Whereas if you stick to the rules and really learn about trading and the fact that it's slow growth and you can do it, and the idea is not to get a whole bunch of 200, 300% gains every day. I mean, and the poor market, the market hooks you on this stuff. It's ridiculous. It's doing everybody a disservice because trading is something you're going to want to do for the rest of your life. And you've got to understand that you're going to have to be able to manage moderate days, explosive days, sideways days, and you're going to have to learn to stay away from the market. Okay, come back over here. We're moving back up again. You notice that the crash index is moving up. Okay, well, guess what? SPY should be moving up as well. Sorry, SPY is right here. Crash index moves up. We're going to be looking for the SPY to start moving up. Come back over here to the SPY. Here's our little sideways trend. Let's see what happens. But again, do not, and the reason I'm kind of animated about this is because I'm hearing from people that, hey, I'm having trouble. I'm not making money. It's kind of hard not to make money if you're doing it the right way. If you're doing it the right way and you're cutting your losses out early and you're not trying to pick, bottoms in a downtrend or tops in an uptrend, I see so many people. I mean, they're doing this. So look over here on the hourly chart, right? All the way down this trend. I kept seeing people trying to pick bottoms. Oh, I'm gonna buy in right here. This is the bottom, double bottom. Look, I can argue, I can make a point. Double bottom, buy in. This is it. This is the bottom. It's got to be. Oh, look, bottomed, set up. Oh, look, this is the bottom. It's got to be. Oh, look, it rallied up and now it's coming back down. I'm going to try to buy in the bottom. It's going to bounce here. It's going to bounce here. It's going to bounce here. Oh, look, bottom. It's going to set up. It's going to bounce. Where's the bounce? Where's the beef? You're in a dominant downtrend. And look, I'll come back over and show you we'll come back over here to hourly. That was actually daily. So let me come in there to daily. This big, beautiful, was that hourly or daily? What was it? That's hourly. So come back here to hourly. And look at this downtrend. There's the downtrend. And this is one of my proprietary indicators. I'm sorry, I left it on the chart. But look at this downtrend. Down, 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 all the way down, all the way down, all the way down, until we finally hit up a low. Now, my proprietary indicator indicated we were reaching a low a little early. We didn't move into upward trending until back over here. But again, the crash index was very clear in this downward trend. It had a couple of little bounces. Yeah, you could have maybe caught those off of 5-minute charts, but be aware. If you're a gambler, you do not want to be buying dips into this downtrend. You don't want to be trying to sell into this uptrend. Because if you're going to try to pick tops in an uptrend or pick bottoms in a downtrend, I promise you the market can stay in a trend a lot longer than you can fund your account. Okay, that's literally a general rule. The market can trend in bigger modes and bigger phases than you can stay liquid. Okay, now, 28 minutes. What I'm trying to teach you guys here is to use techniques. I'm going to end right here. Use techniques that will help you protect your capital and learn to stop when you are making mistakes. Learn to stop what you're doing when things aren't going the way they're supposed to go. If you get 2 or 3 or 4 good trades a day, in my opinion, you can stop trading and be done for the day. Okay? There is no reason for you to continue to move on if you're making good money and the market's doing well. I mean, you could continue if you have the skills, but you know what? The markets will be there tomorrow. Okay? So be aware that if you're really not getting it, pay attention. It's very important for you to understand that trading is not gambling. And that's the whole purpose of this video. Okay, guys, go get some today. We got a little rally happening. We're getting into that little rally mode here. There we go. SPY is taking off again. Go get some. Talk to you later.